Alright, let's look at some earnings tickers now. Let's go a little risky. I'm not saying get into it by any means, but it's forming a flat-based technical pattern around 120. E-Trade. I can't even imagine what these earnings are going to be, and I don't want to try. It could go either way. I mean, it's very, very sketchy. Very, very hush-hush. So I'm not going to touch this, and I hope you don't either. There is not a lot of volume in this name, and remember what happened the last time they reported bad earnings. These people got shellacked. Am I expecting the same thing? No, I'm not expecting it to be this bad. But just in case it is, don't trade it. You could buy it on the dip. You never know. But you could take it on the dip, and there could be some push for it to go higher after earnings. But that would be the only time that I'm touching it. Watch it though. Just watch it. SanDisk. Again, what I said earlier in video 2, I believe, SanDisk is something I am watching for revenue beat and cash flow beats. If it beats estimates on both of those, I think SanDisk is going to do very, very well with earnings. And I'm expecting it. It's coming in right now at a 17-cent loss for earnings per share, EPS. But I'm looking definitely over for that. And I'd like to see the volume higher, at least by 10 million, at least by the end of the day. Higher over that 10 million spot. If we get that, I think that we have a solidified move to at least 21 if earnings are better than expected by a long shot too. Can't just be a couple cents over. I mean, I'm expecting the high average here, which I believe is somewhere around 9 cents loss. So that is something to definitely keep your eye on. Steel Dynamics, not for me, definitely with earnings coming up, but I can see it something like this happening. AK Steel reports earnings, dips, and then pushes off that trend line. I can see it happening, and I am watching Steel for this, especially on a low volume decline if earnings are bad. 14.17 is the spot to watch. Under that, it's probably going to be 13. I haven't checked the moving averages, so let's check that out. 50-day moving average right there. We actually have a good setup here, but 50-day moving average is probably going to be the support that if earnings are only a little bit worse than expected, I just don't like steel yet during earnings. I think that the demand isn't there. And with China sort of out of the steel market and already packed with steel inventories, they're not buying. No one else is buying. So a lot of these steel companies are really not feeling it right now for earnings. I expect steel to recover either late Q4 or early Q1 of 2010, and that's just a personal opinion of mine. Until demand starts picking up, I don't think you're going to see these steel names get above really, really high numbers. Steel had a nice run. Let's check out the SLX. Steel had a really nice run. But you never know. I said Head and Shoulders. It broke down to that neckline somewhat and then pushed back up with the market push. But I can see steel rolling over here because of all based on earnings and lack of demand for steel right now. That's STLD. TCK. Actually, my Mr. Tatro, Quint, Q-Man, Q-Daddy, just talked about it on the StockTwits update, and he said that he's not interested in it. It's a copper play. I like copper. Freeport did well. Copper still has demand. Something to look at during earnings. Again, he said he doesn't play earnings, but something to look at. He did say it did have a nice run, and boy, did it ever. This is, again, just something to definitely just something to watch, TCK, because of its copper base. EXP. I'd love this kind of like steel on a pullback because its revenues, I don't foresee Eagle Materials beating revenues. I was looking over the fundamentals today. I don't see it doing that. NEM, gotta make it quick. NEM 43.36, it's gonna beat it. This company has a ton of cash. Speaking of a ton of cash, Thermo Fisher has a load of cash year over year, as does Lear. These are tickers to look at. Have a good afternoon, everybody.